The year 2021, a battle raged on Wall Street. On one side, hedge funds, experienced, powerful, used to getting their way. On the other, everyday investors, armed with smartphones and a belief in companies like GameStop and AMC. GameStop, a video game retailer. AMC, a movie theater chain. Both struggling, both heavily shorted by hedge funds betting on their demise. But something unexpected happened. Retail investors communicating online saw an opportunity. They started buying. The buying frenzy fueled a surge in prices. GameStop and AMC stocks soared. Hedge funds, caught in a short squeeze, scrambled to cover their positions. It was a David versus Goliath story for the digital age. The short squeeze subsided, but it marked a turning point. GameStop and AMC, once left for dead, were suddenly flush with cash and a passionate investor base. The game had changed. The short squeeze provided a lifeline, but GameStop and AMC knew they couldn't rely on short squeezes forever. They needed a long-term strategy. Both companies began making strategic moves. They focused on strengthening their balance sheets. They paid down debt. They invested in new initiatives to adapt to the changing market. Crucially, they understood the power of their newfound investor base. These weren't just traders. They were fans. They were believers. GameStop and AMC began communicating directly with these investors, building a sense of community and shared purpose. This wasn't about quick profits. This was about survival and potentially thriving. GameStop and AMC employed financial tools to further their goals. One such tool was the stock split. By dividing their shares, they made them more affordable for smaller investors. This increased liquidity and trading volume. Another tool, share offerings. By issuing new shares, they raised capital. This capital could be used for debt reduction, investments, or acquisitions. These moves weren't without risk. Issuing new shares can dilute existing shareholders' ownership. However, both GameStop and AMC understood strategic use of these tools could strengthen their positions over time. The stock market is a volatile place, especially for companies like GameStop and AMC. Their stocks became highly volatile, prone to wild swings. Short sellers continued to target them, betting on their decline. This created a constant battle between bulls and bears, pushing the stock price up and down. Through it all, GameStop and AMC remained focused on their long-term goals. They didn't get distracted by the day-to-day noise. They understood volatility is part of the game. The GameStop and AMC saga highlighted a new breed of investor, the diamond hands investor. These investors hold onto their stocks through thick and thin. They don't panic sell when the price drops. They believe in the long-term potential of their investments. The diamond hands philosophy is about more than just holding on. It's about informed decision-making. It's about understanding the fundamentals of the companies you invest in. It's about tuning out the noise and focusing on the long game. It's a philosophy that requires patience, discipline, and a strong belief in your convictions. In the turbulent world of the stock market, these qualities can be invaluable.